Hey everyone, welcome back to the channel. Today, we're diving into something truly life-changing: how to break free from financial constraints and build your path to financial freedom. Whether you're dreaming of quitting that 9-to-5, traveling the world, or simply enjoying peace of mind, this video is packed with actionable strategies to get you there. So, grab a notebook, hit that subscribe button if you haven't already, and let's embark on this journey to financial independence together. Building financial freedom requires a combination of strategic planning, disciplined execution, and a mindset geared towards long-term success. Here are some detailed steps to guide you through this journey. Set clear financial goals. Short-term goals: pay off debt, build an emergency fund. Medium-term goals: save for a house, invest in education or skills. Long-term goals: retirement planning, financial independence. Create a budget and stick to it. Track income and expenses. Use budgeting tools or apps to monitor your spending. Prioritize savings. Allocate a portion of your income to savings before spending on discretionary items. Reduce and eliminate debt. High-interest debt. Focus on paying off high-interest debt like credit cards first. Debt snowball method. Pay off smaller debts first to build momentum. Debt avalanche method. Pay off debts with the highest interest rate first to save more on interest over time. Build an emergency fund. Savings goal: aim for 3-6 months worth of living expenses. Accessible accounts: keep this fund in a high-yield savings account or money market account. Invest wisely. Retirement accounts: maximize contributions to 401ks, IRAs, or other retirement accounts. Diversified portfolio: invest in a mix of stocks, bonds, real estate, and other assets. Index funds, ETFs: consider low-cost index funds and ETFs to diversify your investments. Increase your income. Side hustles: explore freelance work, gig economy jobs, or starting a small business. Career advancement: seek promotions, additional qualifications, or new job opportunities. Passive income: invest in rental properties, dividend stocks, or create digital products. Develop financial literacy books and courses: read books, take online courses, or attend seminars on personal finance. Financial advisors: consider consulting with a financial advisor for personalized advice. Live below your means. Frugality: adopt a lifestyle that minimizes unnecessary expenses. Value spending: spend on things that truly matter and bring value to your life. Plan for taxes: tax-efficient investments. Use tax-advantaged accounts and strategies to minimize your tax burden. Professional help: consult with a tax professional to optimize your tax situation. Protect your assets. Insurance: ensure you have adequate insurance: health, life, disability, property. Estate planning: create a will, establish trusts, and plan for wealth transfer. Monitor and adjust your plan. Regular reviews: periodically review your financial plan and make necessary adjustments. Stay informed: keep up with changes in financial markets and regulations that may impact your strategy. Mindset and habits: discipline: stay committed to your financial plan and avoid impulsive decisions. Patience: building wealth takes time. Remain patient and focused on your long-term goals. Resilience: be prepared to adjust and stay motivated even when faced with setbacks. In 2024, investing for financial freedom involves considering a diversified mix of assets that align with your risk tolerance, time horizon, and financial goals. Given the current economic landscape, there are several key areas to focus on. Stock market: investing in individual stocks can offer high returns, though it comes with increased risk. Look for companies with strong fundamentals, competitive advantages, and growth potential. Sectors like technology, healthcare, and renewable energy are expected to continue growing. Index funds and ETFs: these funds provide diversification at a lower cost, reducing risk compared to individual stocks. Broad market index funds like the S&P 500 are popular choices, offering exposure to a wide range of companies. Real estate: real estate can be a solid investment for generating passive income and capital appreciation. Consider residential rental properties, commercial real estate, or real estate investment trusts, REITs. The real estate market stability often provides a hedge against inflation. Bonds and fixed income securities: these are lower risk investments that provide steady income. Government bonds, municipal bonds, and high-quality corporate bonds can be good options, especially as interest rates fluctuate. Cryptocurrencies: while highly volatile, Cryptocurrencies like Bitcoin and Ethereum have gained mainstream acceptance and can offer substantial returns. Invest only a small portion of your portfolio and stay informed about regulatory changes and market trends. Emerging markets. Investing in emerging markets can provide higher growth potential due to rapid economic development. Look for diversified funds or ETFs focused on countries with strong growth trajectories. Precious metals, gold and silver are traditional safe haven assets that can protect against market volatility and inflation. These can be held physically or through ETFs that track metal prices. Alternative investments. These include assets like hedge funds, private equity, and venture capital. These investments can offer high returns but often require a higher level of investment and come with higher risk. Sustainable and ESG investments. Environmental, social, and governance (ESG) criteria are becoming increasingly important. Investing in companies that prioritize sustainability and ethical practices can be both financially rewarding and aligned with personal values. Technology and innovation. Companies at the forefront of technological advancements, such as artificial intelligence, biotech, and renewable energy, offer high growth potential. Look for innovative firms with strong R&D and market adoption. Education and skill development. Investing in your own education and skills can lead to higher earning potential and better career opportunities. Consider courses, certifications, and professional development in high-demand fields. Dividend stocks. Companies that pay regular dividends can provide a steady income stream and potential for capital appreciation. Look for firms with a history of consistent dividend payments and strong financial health. It's essential to conduct thorough research or consult with a financial advisor to tailor your investments to your specific needs and goals. Diversification, regular monitoring, and staying informed about economic trends are crucial strategies for building financial freedom in 2024. Achieving financial freedom involves a blend of smart strategies, disciplined practices, and an adaptable mindset. To go beyond traditional advice, consider implementing these approaches. Focus on passive income streams. Diversifying your income sources beyond traditional employment is crucial. Consider investments that generate passive income, such as rental properties, dividend-paying stocks, or creating online courses and digital products that can sell over time without requiring constant effort. Leverage compound interest. Start investing early and consistently to take advantage of compound interest, which allows your investments to grow exponentially over time. Reinvesting earnings rather than spending them can significantly boost your wealth in the long run. Network and seek mentorship. Surround yourself with financially savvy individuals and seek mentors who have achieved financial freedom. Learning from their experiences, insights, and mistakes can provide valuable guidance and open up opportunities you might not have considered. Embrace minimalism and intentional living. Reducing unnecessary expenses and focusing on what truly brings value and happiness can free up more money for savings and investments. Prioritizing experiences over material possessions can lead to a more fulfilling and financially stable life. Automate your finances. Set up automatic transfers to your savings and investment accounts. Automating your finances ensures that you consistently save and invest without having to remember to do it manually each month, helping to build wealth effortlessly over time. Invest in tax-efficient vehicles. Utilize tax-advantaged accounts like Roth IRAs, 401ks, and health savings accounts, HSAs, to minimize your tax liability and maximize your investment growth. Understanding and taking advantage of tax strategies can significantly impact your net worth. Develop a side business. Starting a side business or freelancing in your area of expertise can provide additional income and potentially grow into a full-time venture. This not only increases your earnings but also diversifies your income streams, making you less reliant on a single source of income. Stay informed and adaptable. Financial markets and economic conditions are constantly changing. Staying informed about global trends, new investment opportunities, and economic policies can help you make better financial decisions. Being adaptable and willing to adjust your strategies in response to new information is key to long-term success. Prioritize health and wellness. Good health is a critical component of financial freedom. Investing in your health through regular exercise, a balanced diet, and preventive care can reduce medical expenses and improve your quality of life, allowing you to enjoy the fruits of your financial efforts. Cultivate a growth mindset. Continuously seek to improve your financial knowledge and skills. Read books, take courses, and engage with financial content to stay ahead. A growth mindset encourages lifelong learning and adaptability, which are essential for navigating the complexities of personal finance. Foster a positive money mindset. Your beliefs and attitudes towards money can greatly influence your financial behavior. Cultivate a positive relationship with money by practicing gratitude, setting clear intentions, and visualizing your financial goals. Overcoming limiting beliefs and developing a healthy money mindset can empower you to make better financial decisions. By integrating these strategies into your financial plan, you can enhance your journey toward financial freedom, making it more robust and adaptable to changing circumstances. That's a wrap on our guide to breaking free and achieving financial freedom. I hope these tips have sparked some new ideas and motivation for your financial journey. Remember, it's all about taking small, consistent steps and staying committed to your goals. If you found this video helpful, give it a thumbs up, share it with anyone who needs a boost, and leave a comment with your own financial freedom tips or questions. Let's keep the conversation going. Thanks for watching, and until next time, keep hustling and stay financially savvy.